Hello, YouTube. We've talked about danger, but it is here. It is getting worse, and we notice the S&P has now lost its daily uptrend. It is now hanging below the weekly uptrend, and that is important because as we look to QQQ, there is danger here. We have a daily lower high, a lower low, closing below the previous candle low and also below the 50 DMA, which is really bad. I thought the S&P had a chance to break the lower high spell today. It did not. So what does that mean? Whoa, there is danger, danger, there is danger. Let's make sure we understand exactly what that means because we've been talking about two patterns. We've been talking about the seasonality chart and how we're supposed to be going mostly sideways from here, or we're talking about, oh my goodness, if we're due for a stock market crash. Well, these candles give us a perfect template here. So we're going to go through each of those right now. Let's look at the seasonality chart, which means we're going to hide everything, snap this to a line chart, and just look and see if it looks similar. All right, so down, dead cat bounce, down to a marginally lower low. Here we close at 446.81. Here we close at 445.7. Not a lot lower, but it's lower. All right, so let's zoom in nice and close here. Here we go. Let's see what we got for the month of August. There's the low. It's supposed to be a higher low, but I will say this is close enough. And the reason why we're looking at a line chart here is because of what we talked about yesterday. A line chart or the seasonality chart only cares about the 4 o'clock printed close. That's why we're seeing a lot less data. So I would say that, yep, it's probably close enough, but the S&P cannot fall back below its 50 DMA. That is my caveat. Otherwise, it looks like we could fall back down here to our Fibonacci area at about 430 and our dominant uptrend. This is also important because we've talked about this upside gap being left. If we can't form a daily higher high, which I really try to do today, I don't know how it's going to actually go inside this gap. And we mentioned that we have 1, 2, there's like 5 different gaps as we go lower. If you look at QQQ, the story becomes much more obvious. It closed yesterday with a hammer, and it had the potential to form a daily higher high today. It just couldn't quite do it. So yesterday's high, 372.66. Today's high, 372.45. So we also note that if we go to, I actually want to show something today that I think people might find quite helpful because I'll go through that a little bit later in the show. But what we're going to look at are going to be dark pool prints because if we go here to SPY, we look at the high of the day for yesterday, it's 450.7. Looking at a 15-minute chart though, what's our actual cash market high for yesterday? Well, it's actually 449.23. So how do we get a price at 450.7 for the close yesterday, which is up here, when we don't have that? So I'll try to explain what dark pool prints are and how those can actually feed through to the cash market printed close, meaning the session during the day. All right, that is scenario 1. Now let's go to scenario 2, which means we're looking at the crash potential. And because we have CPI coming in tomorrow, we're probably going to get a push one way or the other. So the recipe here is pretty clear. It means that we need to have at least 2 red bars in a row. 2 red, 2 red, 2 red, 2 red. We also need to see a weekly lower low. So here's the lower low closing below the low. 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 What is S&P flashing so far in the weekly chart here? Let's just hide everything and zoom in nice and close so it's easy to see. Okay, 2 red bars. We've closed below the weekly low last week. And now this week, we're also set, not currently, but we're set to close below 446.3, which is basically, we're right at that last week low and after hours here, right now to the cent. So check, 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 check. That led to either a pullback, a crash, or a crash. It even happened at the all-time high up here too. 2 red in a row, below the previous candle low, boom, there's a slam. So the S&P is flashing that it could be headed for a crash. We got 2 more sessions left, which means that right now it is Wednesday. That's right. Just wanted to double check. We got the cash market tomorrow, the cash market on Friday, and then we're closing out the week. So evidence is building up for both teams. The bull case, the bear case. I've been trying to talk about the bear case a little bit more because people tend to get really surprised when we take the staircase up and take the elevator down, right? Staircase up. Let's look back to the chart here. Staircase up, elevator down. People just don't really get prepared for that. And we've been bouncing around a lot between fear and greed. There's big intraday ranges. I'm not quite sure which way we're going to go, which is why my level of confidence is not very high. So right now, I am partially hedged, not fully hedged. But I'm just not sure which way we're going to go. So I'm going to ask you for a huge favor, please and thank you. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. You can also join us for 2 free weeks because I've been talking a lot about how you can join us for 2 free weeks if you want to trade with me, Justin from YouTube, because as much as I can try to tell you what the market's going to do, to be honest, we have to plan, assess, and then proceed, which means we want to cross the road, right? The corner store is over here, right? We want to go to the corner store. We want to go get some candy. We want to go get a pop or a Slurpee, whatever you like. When I was a kid, I used to love going to the corner store. What happens though, where there's the road in the middle. So you don't just get to the road and then just run through no matter what. What do? Well, you look left, you look right. If it's safe, then you proceed, which means we plan to get to the corner store. We plan to get our candies. But if there's a car, it's not safe for us to go. So what do? We have the crosswalk light. So that's what we're trying to think about right now. The crosswalk could be our stop. It means we want to be prepared for the potential to be wrong. And at a certain point, data changes. Where we are right now with 446, I will give you a different answer for it, 448 or 442 tomorrow, because it's going to change the way this relationship is working out here on the weekly chart. And what I've also been talking about pretty extensively for the last few weeks is this math number here. It's at 451.26, and there's a question mark, which means I don't know. I have a lean, I have a bias, I have a thesis, I have a theory, but I don't know for sure, which is why there's the question mark. Are we going to push up here to all-time highs or the 100% retracement? Or are we going to push back down here to about 61%? That's that 430. 430 happens to correspond right here on our support. Also happens to correspond with our August high. It's a natural area for us to slide if we do the same thing on SPY as we did on QQQ. I'll leave you with one more thought here. Thursday's the day. I think if the data comes in as forecasted, it should be tilted bearish because we're seeing an uptick in CPI. So when we're thinking that we have peak CPI, but it ticks back up higher, if there is more rumblings for fear, those should materialize tomorrow. I don't know for sure though, which means I have an asterisk beside that. I have a caveat. It's to be determined, TBD. So if it's to be determined, are we noticing anything else that over time has really worked well for us? I'll show you. Let's delete everything now. And let's see an expansionary period, which means basically looking at QQQ, where we start right here. And by starting right here, what I'm talking about, we're actually going back to here. By closing 2 consecutive daily closes over the 50 DMA, what do? Well, we snap the spell because, man, it was a struggle for a long time. We get above the 50, we lose it. So what I want to show you here is that when we finally reclaim the 50 DMA for 2 consecutive candles, there is a potential trend change. Man, from 280 to 380, that's 100 points. That's a huge, huge rally. And inside of here, we have one dip back down to the 50 DMA, but we do not close 2 consecutive daily closes below it. We get 1, and then it bounces right back over. So if that's the case, we just got our 1. So tomorrow, if we get a negative reaction to CPI and we gap down, pump up, and close back above the MA, there's the potential that we crash line on the 50 and then snap back to higher highs. Crash line on the 50, snap back to higher highs. That would be the seasonality chart. On the flip side, if we get 2 consecutive daily closes below the 50 DMA, meaning 2 daily closes, or tomorrow we close red, we're likely going to be going lower. Where? To those Fibonacci areas. Let's look back in time here. So if we go back to when we were in a massive expansionary period, here we got 2 consecutive daily closes below, also with a gap, ironically, which does get filled. There's your correction. From peak to trough, it's about 8%. So it's not a huge decline, but that's like almost a correction. Same thing here. 2 consecutive daily closes below the 50 MA. Man, that's the start of the bear market. That's a long time where we go down. So that's a decline of roughly 20+%. That's a bear market. So if it works on the downside, it should also work on the upside. So if right now we're going to be doing a trend change or we're going to be going lower, that's really what I want to pay attention to. It should not be very complicated from here. We should be able to have a simple story. And the simple story is increasingly simple when we think about one simple statistic. It's this one here. Nothing goes up in a straight line. We want to build support as we're building our staircase to heaven, right? We're going to blue skies. We're going to heaven, right? Stairway to heaven. Well, the S&P has returned more than 20% so far this year. And every single time going back to the 1950s or even the 40s, there's been dips. Sometimes it's 4%, sometimes it's 30. But when we're getting warnings that we could be going lower, or you see fire approaching the town, You don't hope and pray your house will not get burned to the ground. What do? You buy some insurance. You get prepared. Well, that's what we're talking about doing right now. So I don't really want to go too much further. I think I laid out a great story on the weekend, which you can now view on the left-hand side here. And if not, I would really appreciate if you could drop me a comment and tell me whether or not you think we're going to go up or we're going to go down, or if you notice any holes in my story. If not, thank you so much for tuning in, and I look forward to seeing you tomorrow. Thank you.